Greetings and welcome to the deep dive. Today we're going to dive deep into the inner workings of a corporate entity that has this staggering influence over the global property market.
A huge influence.
I mean, whether you are looking for a studio apartment, selling a commercial high-rise, or even just booking a hotel room, this company is probably touching the transaction in some way.
It almost certainly is.
And yet, despite being everywhere for so many people, the company remains largely unknown by name. CoStar Group.
Right, and CoStar Group Inc. is not just another tech company. It's fundamentally the indispensable provider of information, of analytics and marketing services, mainly for the commercial property industry.
And not just in the U.S. anymore.
Oh, not at all. Across North America and increasingly Europe and Australia. To put its size into perspective for you, it's a massive public company. It's a component of both the Nasdaq 100 and the S&P 500.
Okay, so that signals it's a major economic bellwether in the U.S. economy, a stable leading company.
Exactly. Its footprint is, frankly, enormous. And its data is the oil of the real estate machine.
So our mission for this deep dive is to really unpack the entire anatomy of this corporate juggernaut. We're going to trace its history, starting from its founding in D.C., way back in 1987.
And we'll chart its path right up to its current market status. We have to look closely at its signature move, this relentlessly aggressive growth by acquisition strategy.
And crucially, we have to spend some real time on the controversies, because there are a lot of them. From serious claims about employee treatment and this high-pressure culture to, critical antitrust and price-fixing lawsuits.
Which seem to inevitably follow this level of market dominance. I mean, understanding CoStar isn't just about understanding a successful company. It's about understanding the consolidation of information in our economy.
How so?
It's not just the website you visit. It's the infrastructure, the data source, the analytics engine that underpins, well, virtually the entire commercial real estate world, and now, more and more, the consumer world, too.
Okay, let's unpack this. From starting out by literally digitizing paper property files before the internet was a commercial reality, to then leveraging its wealth to spend, an estimated $35 million on Super Bowl ads last year?
Yeah, that was a huge statement.
CoStar's story is really a blueprint for how modern information dominance is built, maintained, and you could argue weaponized through consolidation.
Yeah.
So let's start at the beginning. We're in Washington, D.C. It's 1987. This is when CoStar Group is founded by Andrew C. Florence.
And what's really noteworthy here is that Florence is still the president and CEO today. Louisa Sams is the chairman. That kind of stability at the top is, it's pretty rare for a company that has gone through this much change.
It is, but what strikes me about the very beginning, its genesis, is how perfectly strategic it was for that specific time.
Oh, absolutely. The foresight that Florence showed is arguably the single most important factor in CoStar's success. You have to think back to the late 1980s. Commercial real estate data, which buildings are for sale, who owns them, the square footage, lease rates, all of that was notoriously fragmented.
That goes all on paper, right? In
Yeah.
filing cabinets.
Exactly. Paper records, proprietary files in different brokerage houses, buried in county records. It was hard to access, impossible to aggregate efficiently, and even harder to analyze across a big market.
So CoStar was basically created to solve an information bottleneck that the industry itself didn't even realize was so acute yet.
Precisely. CoStar was one of the first companies, maybe the first, to systematically digitize and aggregate all this commercial property data. They were building a digital infrastructure for a world that was still running on analog.
How do they even do that?
They hired tons of researchers to physically go out, collect, verify, and input this data. They created a clean, structured, proprietary data set from scratch.
And the crucial part is they did this before the internet became the universal tool for commerce.
That's the key. That gave them an insurmountable early advantage. They owned the clean, deep data set before anyone else. It meant that later competitors were always playing catch-up, trying to clean up messy user-generated data, while CoStar already had the gold standard.
And that foundation of owning the data, that proved to be incredibly profitable. It led to some key financial milestones pretty quickly.
It did. They went public with an IPO on the Nasdaq in 1998, and they raised $22.5 million.
Which is a good result. But there's a legal detail from that era that I think really shows how fiercely they were willing to protect that information they'd collected.
Yes, this is where we see CoStar's use of the legal system as a business strategy really start to take shape. The lawsuit was in June 2004, CoStar Group, Inc. v. LoopNet, Inc.
That became a landmark case in U.S. copyright law,
The
right?
huge one.
So explain why this case was so important, especially since LoopNet, eventually becomes one of CoStar's biggest acquisitions.
It's ironic. It's very ironic. The legal fight was all about intellectual property and the responsibilities of Internet Service Providers, or ISPs. LoopNet was a competitor, an online listing service,
Okay.
and CoStar alleged that LoopNet users were posting CoStar's proprietary copyrighted photos and data onto the LoopNet platform. The legal question was whether LoopNet, as the ISP hosting this content, had to actively monitor it for copyright infringement.
Or could they just say, hey, we're just the platform and be protected by the Digital Millennium Copyright Act?
Exactly. CoStar was essentially trying to legally force their competitor to police its own users to protect CoStar's assets.
And they won.
They did, and that victory was strategically profound. It helped set precedents that put more liability on platforms like LoopNet to filter and monitor user content, especially copyrighted data that CoStar had spent millions to collect.
So it solidified the idea that CoStar's data was theirs. It was property.
Yes, it gave them an aggressive legal framework to defend their information empire. And this willingness to use complex litigation to define and defend their IP became a cornerstone of their business strategy from then on, often against future acquisition targets.
So that's the legal groundwork. Now let's look at the company the groundwork supports today. Based on 2024 and 2025 data, the scale is just monumental.
It's huge.
As of 2025, CoStar has, 6,593 employees, and the 2024 financials show revenue of US $2.74 billion.
With a net income of $139 million and total assets of a colossal $9.26 billion. That's the kind of balance sheet that lets you make very aggressive moves in the market.
And it lets you build some impressive headquarters. They completed their move from D.C. to Arlington, Virginia in 2025, but there's an anecdote about an earlier headquarters deal in 2009 that I think just perfectly illustrates the power of their core advantage.
Oh, this story is a perfect case study in the value proposition they sell to their own clients. It's fantastic.
So tell us the details, because it says so much about the advantage of controlling the best data.
Okay, so in October 2009, CoStar buys a building from the Mortgage Bankers Association to be its headquarters. The price was $41.3 million.
Okay, sounds like a lot of money.
It is. But here's the critical context. The exact same building had sold just 2 years earlier, in 2007, for $97 million.
Wait, so they bought a prime commercial building for less than half its previous price.
Less than half. They saved over $55 million on their own headquarters purchase in 2 years.
That's genuinely wild. Was that just luck? Good timing with the market crash.
That's the thing. It wasn't attributed to luck. CoStar themselves explicitly claimed that they use their own sophisticated analytics data, the same data and forecasting models they sell to their clients, to determine the exact right moment to buy that building at a deeply distressed price.
At the bottom of the market downturn.
At the absolute bottom. This anecdote is the perfect illustration of their power. They applied their own data dominance to achieve a massive multi-million-dollar saving for themselves. It shows the incredible commercial advantage you have when you control the tools that define market timing and value.
I mean, imagine having data so good, you can save $55 million on your own office. That's the kind of power that must keep competitors, and probably regulators, up at night.
Absolutely.
And that story is the perfect bridge to the next chapter of CoStar's journey. Because once you prove you can do that for yourself, the next logical step is to acquire every other data source you don't already control. And this is where it gets really interesting. The 2010s, this is when CoStar transforms. They go from being this powerful specialized data provider to a dominant, multifaceted marketplace behemoth.
And their main engine for this was an extremely aggressive, relentless, and very strategic acquisition strategy. They were essentially swallowing up huge names across multiple real estate sectors.
The volume and the speed of these acquisitions, it just shows a clear, calculated effort to consolidate the market.
Oh, it was never about just organic growth. It was about eliminating competition, acquiring specialized tech, and integrating these vast separate pools of information into their central data ecosystem. They were buying data silos and the customer bases that came with them.
So let's break this down. Let's start with their domestic consolidation in their core commercial market. They started early, right? Acquiring Gresham Property and Portfolio Research in 2009.
Right, and that instantly integrated high-level investment research into their offerings.
Right.
But the biggest splash, maybe the most pivotal acquisition of this entire era, was the 2012 purchase of LoopNet.
For a massive $860 million.
A massive price tag. And remember, this is after that contentious 2004 lawsuit we talked about. The acquisition was both brilliant and ruthless.
LoopNet was their biggest competitor in the commercial listing space, right?
Their most significant. So by acquiring them, CoStar did three things at once. One, they eliminated their main rival. Two, they integrated LoopNet's extensive data, which vastly improved their own core offering. And three, they successfully ended a very long and very expensive legal rivalry on their own terms.
It sounds like vertical and horizontal integration all rolled into one move. Did they pick up other assets in that deal too?
Absolutely. The $860 million also brought in LoopNet's other marketplace properties like BizBsell,
Which is the big platform for buying and selling small businesses.
the leading platform, and also Lands of America, a massive site for undeveloped land and rural property. So suddenly, CoStar's reach went from commercial office data into these lucrative niche markets for business sales and land. It was a complete consolidation.
So once they'd solidified their commercial dominance, they immediately pivoted. They started targeting the residential sector, focusing first on the massive recurring revenue stream in rentals.
Yep. And they launched that phase in 2014 by acquiring apartments.com for $585 million.
And this was their crucial move into the consumer-facing market.
A huge strategic shift. CoStar's core product was a subscription-based B2B analytical tool. Apartments.com is a B2C advertising model. This acquisition let them diversify their revenue and leverage their deep, verified data expertise into a high-volume consumer market.
And they didn't stop with just that one. It seems like once they decide to own a niche, they just buy every viable player in it.
That is the pattern, exactly. The year after Apartments.com, in 2015, they added Apartment Finder. This just signaled their commitment to dominating rental search.
And then came a whole series of smaller, more specialized acquisitions.
A very strategic series. Westside Rentals in 2017, targeting the high-end LA market. Ford.com in 2018, another major listing asset. Cozy Services in 2018, which was key. It did renter screening and rent payments.
So they were buying the transaction infrastructure itself.
Precisely. And then Off-Campus Partners in 2019, specifically for the high-turnover student housing sector. By integrating all of these, they became the centralized data listing and transaction layer for basically all rental property searches in the U.S.
It's not just about listings anymore. They're providing the software tools that landlords need to operate, which makes them indispensable.
Yes.
But their ambition didn't stop at rentals. Around 2020, they started this aggressive direct push into residential sales. They were positioning themselves to go head-to-head with Zillow and Realtor.com.
They absolutely threw down the gauntlet. They started with the acquisition of HomeSnap, the residential mobile app, for $250 million in late 2020.
And HomeSnap gave them a powerful presence right on real estate agents' phones.
A direct line to the agents. And that paved the way for their next big move in consumer sales. Buying Homes.com from Dominion Enterprises in April 2021 for $156 million in cash.
So by securing Homes.com, they were positioning themselves directly against the residential giants.
Directly against them. And the key difference CoStar is pushing now is leveraging their deep commercial data discipline, their verified property records, to provide a higher quality, more accurate residential listing experience.
So they're trying to export their B2B data expertise into the B2C sales world.
That's the play, backed by vast financial resources to aggressively market Homes.com as the superior data-driven option.
And moving beyond just listings and sales, they also diversified into other key technologies and the hospitality sector. We have to talk about the acquisition of the hotel research and analytics firm STR.
Right. This happened between 2017 and 2020. And STR, or Smith Travel Research, was the global standard for hotel data. Occupancy, pricing, performance, all of it.
Their STR reports are basically essential reading for anyone in the hotel industry.
They are. The acquisition was crucial because it broadened CoStar's definition of property to include hospitality data, which is highly dynamic. It's about daily pricing, booking rates, occupancy analytics, a very different beast from stable office space, but just as data intensive.
Now let's look at their most recent high-value tech acquisitions. These really signal their long-term direction. In February 2025, they acquired the 3D spatial mapping company Matterport for a staggering $1.6 billion.
This is a massive forward-looking investment. You probably know Matterport from those interactive 3D dollhouse views of listings you can navigate online.
Right.
That $1.6 billion price tag shows that CoStar sees the future of property not just in 2D data sheets, but in immersive spatial information.
But why is 3D mapping worth $1.6 billion? It seems like a very expensive visualization tool.
It's so much more than visualization. This 3D spatial data is crucial for the next generation of real estate. First, it allows for remote inspections, measurements, planning, which speeds up deals.
Okay, that makes sense.
But more importantly, for a data company, these digital twins feed vast amounts of spatial and positional data to advanced AI and machine learning models. This is about better prediction, better portfolio management.
So by controlling Matterport, they control the creation and ownership of the digital twins of properties.
Exactly. They ensure they remain indispensable as the industry moves beyond just static photos.
It seems like they're buying the entire property value chain. The data, the software, the transaction layer, and now the cutting-edge viewing experience.
And we should also note the acquisition of Visual Lease for $273 million in 2024. That's a platform to help companies manage leasing contracts. Again, it's about capturing the data around the transaction. And their 2019 partnership with Oxford Economics integrates high-level economic forecasts into their products.
And this whole strategy isn't just confined to North America. Their international expansion shows a clear global intent.
Oh yeah, they are replicating this consolidation strategy abroad systematically.
Let's look at Europe. The expansion really kicked off around 2016. They acquired the German real estate data company Taunus Daily and the Spanish marketplace Belbex.
Right, and it continued into the UK with the marketplace Reala in 2018. They just moved across the continent, picking up key information providers.
We saw them acquire the German data company Emporis in 2020, though that was later dissolved and integrated. Then the French marketplace Bureau Locaux in 2021.
And then a major play in the UK in 2023, acquiring the property portal On the Market for £100 million. This rapid European consolidation is clearly aimed at challenging established local players like Rightmove.
And their latest blockbuster international deal, May 2025, just cemented their global ambition. An agreement to acquire 100% of the Australian real estate company Domain Group for US $1.92 billion.
Wow.
After initially just taking a 16.9% stake.
So if you connect all these dots, this relentless stream of acquisitions, the strategy is perfectly clear.
What is it?
CoStar is executing a deliberate global plan to dominate data and marketplace services across every single real estate niche: commercial, residential rentals, sales, land, hospitality, 3D mapping. They're trying to become the single indispensable source of truth and transaction for global property.
They acquire the data, they acquire the tech to visualize it, and they acquire the platforms to monetize it.
That's the playbook.
That makes perfect sense for consolidation. But doesn't acquiring so many different niche platforms like a BizBSell or an apartment finder risk losing focus on their core, high-value commercial customer?
That's a critical question, and CoStar's answer seems to be that by owning the whole ecosystem, they can feed the data from those niche sources, rental application volume, small business sales data back into their core analytical products.
Making the core platform even smarter.
Exactly. The data from apartments.com tells the core platform where people are moving and what they're willing to pay. That's invaluable for a commercial developer or investor. It's all interconnected.
So what does this all mean for the company's reputation? I mean, when any entity achieves this level of market saturation, this kind of near monopoly, it's just bound to get a ton of scrutiny.
It's the inevitable friction that comes with building an information monopoly. The drive for total market control and efficiency often results in high-pressure internal demands, which then become public concerns. The scrutiny is proportional to the success.
And we saw significant reporting on this internal culture back in 2022. Business Insider published a report with claims from over 29 current and former employees.
Right, and it painted a vivid picture of an extremely high-pressure, often unforgiving internal environment. There were claims of excessive monitoring and intense micromanagement.
What were some of the specific allegations?
The specifics painted a picture of pervasive surveillance. Staffers claimed things like unscheduled check-in video calls from the IT department just to verify they were at their desks working. Wow. There were also allegations of public berating of employees and what the staff called arbitrary firings, especially in the sales force, where they're held to extremely high quotas.
So it suggests a culture where the intense value CoStar puts on data and performance translates directly into intense surveillance and pressure on their own people.
It sounds like they're applying the same data-driven rigor they use on the market to their own human capital.
Exactly.
And for many employees, that seems to have created a highly stressful work environment. Now, the company denied the most serious claims of abuse. They contended that the discontent came from the company's high expectations for performance.
Arguing that CoStar is a place for the best and most dedicated workers.
Right. And reports also noted that CoStar made proactive efforts to manage its public narrative, including trying to take down criticism on social media. It shows a strong defense of their reputation amidst this backlash.
That intense control over their public narrative and the willingness to spend to achieve dominance. That brings us to their massive marketing offensive aimed at the consumer market.
This is where their financial power becomes visible to everyone.
Even if you've never heard the name CoStar, you almost certainly saw their presence during the 2024 Super Bowl. They purchased an estimated $35 million worth of airtime during Super Bowl LV8.
For 4 separate commercials.
4 expensive, star-studded commercials for apartments.com and homes.com.
That spend wasn't just large, it was a declaration of war in the residential marketplace. $35 million designed to signal in the most expensive way possible that CoStar was now a serious contender.
And the New York Times reported on this, describing it explicitly as a move to directly rival Zillow and Realtor.com.
It demonstrates a clear willingness to leverage their vast financial resources, built from their commercial data dominance, to aggressively challenge the incumbents in the consumer real estate market.
This combination of intense internal pressure, deep pockets, and this incredibly competitive spirit. It leads directly to the core allegations of monopolistic and anti-competitive practices that have followed the company for years.
CoStar has been widely criticized for these alleged practices. Sources highlight that they achieved their market position not just through a superior product, but by strategically using things like aggressive litigation.
A strategy we saw them use way back in 2004 with LoopNet.
Right. And also employing what's been called public relations warfare against their rivals. The alleged goal is to push competitors to the brink of collapse or weaken them enough to make them soft targets for an acquisition.
So the acquisition strategy is often preceded by a strategy of tactical destruction, or at least economic destabilization.
Yeah, that's the allegation.
And this intense pressure on competitors, it all culminated in a very high-profile legal challenge in 2024. One that directly links their analytical products to potential market manipulation, the price-fixing class action lawsuit.
This is a significant issue. It moves beyond just competitor complaints and alleges direct, tangible harm to the everyday consumer. In February 2024, a proposed consumer class action lawsuit was filed against CoStar in multiple states.
And the accusation is specific and severe, that CoStar engaged in a price-fixing conspiracy.
Yes.
Who are they allegedly conspiring with?
The claim alleges CoStar conspired with a group of major luxury hotel chains, specifically naming Hilton, Hyatt, Marriott, Intercontinental, Loews, and Accor.
To do what exactly?
To keep room rental prices artificially high, inflating costs for consumers. The allegation is that CoStar provided the platform that made this coordination possible.
So if they were fixing prices, what was the mechanism? They weren't meeting in a smoke-filled room. They were using data.
Precisely. They were allegedly using the highly sophisticated proprietary data flow. The mechanism was the strategic sharing of competitively sensitive, forward-looking information through the company's STR reports.
So this goes back to their acquisition of STR, the hotel research firm. So how does sharing a report lead to price fixing? I don't quite get that.
Well, typically sharing historical market data like last month's average occupancy isn't collusive. What the lawsuit alleges is that the STR reports provided much more specific forward-looking data points.
Like what?
Like real-time occupancy rates, forward booking rates, and projected pricing structures for specific markets. By circulating this highly sensitive, future-focused data among the hotel chains, the chains could allegedly use it to coordinate the market's pricing.
So they could see what their competitors were likely to do next week and price their own rooms accordingly without fear of being undercut.
That's the core of the allegation. It removes the dynamic competition that normally drives prices down for consumers.
And these serious allegations, they were based in part on insider information from an STR software engineer.
Yes, which links the very data analytics CoStar champions, the kind they use to save $55 million on their own headquarters back, to potentially collusive practices that directly impact the consumer trying to book a hotel room.
It just underscores the incredible power that comes with controlling the central analytical hub of a market, doesn't it?
And the very thin line between providing market insights and potentially facilitating market manipulation. So, to synthesize this incredible journey, CoStar Group is a true pioneer. They took a fragmented, paper-based industry in 1987 and systematically built a proprietary data empire.
Right.
They leveraged that early advantage, which we saw with their strategic $55 million saving on their own headquarters, into massive market control through these calculated, aggressive acquisitions.
Absorbing competitors like LoopNet, establishing dominance in rentals with Apartments.com, capturing future tech like Matterport.
And expanding globally with purchases like Domain Group in Australia.
The subsidiaries they own, Apartments.com, Homes.com, LoopNet, STR, they now touch nearly every major part of the real estate transaction ecosystem around the world.
They have succeeded in making themselves indispensable.
But that aggressive strategy, that aim for total information consolidation, it's inseparable from the intense legal and corporate challenges they face.
Absolutely. The claims about their internal culture, the massive Super Bowl spend, and especially the allegations of monopolistic practices and that severe price-fixing lawsuit. It all highlights the tension between building a powerful, integrated data product
And the potential negative consequences of that unchecked market power on both employees and consumers.
Exactly.
Which brings us to the final provocative thought for you to consider. We saw that early anecdote where CoStar used their own analytics to determine the right time to buy their corporate building, saving them $55 million.
A clear, massive, self-serving advantage from controlling the information flow.
So when we connect that internal benefit to the external scrutiny around the price-fixing lawsuit, where the data allegedly facilitated consumer price inflation, the question becomes this. Does that specific advantageous ability to perfectly time and price a transaction at a corporate level translate into an unchecked power that ultimately influences and potentially harms the entire property market for everyday consumers? It's something to mull over the next time you browse an online listing or check hotel rates. Ask yourself who truly controls the data that's determining that price and whose benefit that control really serves.